Hello, everybody. Simon Dixon here, and welcome to episode 75 of Bank to the Future Live. Today, we got a packed house with the complete important people from the Aqua Digital Rising team. And we've got three of the members here to make sure that you understand a bit more about what Aqua Digital are actually up to. So today, we're going to be going deep into the new deal that's gone live on Bank to the Future. Just before we get into that, please do like and share this video. That helps us get more of our investor community involved. We just sent out a mailer, so we should be having more people join. Also, a couple of announcements just before we go into the interview. One of our most frequently requested features from our investor community was to allow for people to deposit ETH and Bitcoin and stable coins to the Bank to the Future platform. We've now made that feature live, which means that if you want to avoid some of the fees, this is just for non-US investors, not for US investors. US investors, we have to go through an escrow at all times, and it has to be a US compliant one to make sure we meet our SEC regulations and requirements. But in terms of non-US investors, you can now deposit those direct to the platform, which means that you can then invest them in the pitch and you can save some of the merchant processing fees. So that's a bit of a bonus for you there. And then we're going to go straight into the interview. So we've got the three people from the Aqua Digital team here today. So we're just going to do a brief introduction. And then we're going to go deep into why Aqua Digital is an interesting opportunity. You may be used to investing in companies and stocks have been readily available. But have you ever wanted just to invest in a person or a celebrity or somebody's career? We're going to be discussing how that might be possible thanks to some innovation in financial technology. So let's jump straight in. So let's hear from each of the team. So maybe each of you could just introduce yourself, your role, and how you got involved in this company and what you were up to before getting involved in this. Should we start with you, Andreas?
Yeah, hello. Thank you very much for this opportunity. Andreas Ruether, I'm German. I'm in the industry for almost 28 years. I used to serve for IG Markets and was the CEO of the German operation. My background is law, and I've been running several brokerage companies and asset management firms under German BaFin regulation and the UK regulation. The start with Aqua was a great opportunity. It was offered by friends, and I think that is probably the greatest innovation, and I'm really honored that they have asked me, and it's pure fun to work on that fantastic project with a fantastic team.
Okay, so Andreas, for those that don't know, some of our maybe American investors, they may not be familiar with companies like IG Markets, but if you're from Europe and particularly the UK, IG Markets is, a really, really fast-growing contract for difference derivatives, financial derivatives provider. Could you help people understand a bit more about how that's relevant here and how your background at IG Markets are for those that may not be familiar with the company?
Yeah, as you said, it's a contract for difference company. Contract for difference is a derivative where you have a leverage for your investment. So you put a deposit and you can trade a higher amount, pretty much similar to the option, but it's not an equity product. So the counterparty is a broker. And why is that important for Aqua? Aqua, of course, in its core business is a big data company, but our most important vertical is the financial services industry. And you were just talking about it in your introduction. When it comes to indices on people, on person and outstanding personalities, that index on this index, we can offer derivatives and they are tradable. So it's absolutely right what you said. We can make people tradable, and you can invest into a person, you can invest into a career, or in a celebrity or an influencer or a famous sports person. So that is very closely linked.
Excellent. Yasin, do you want to give a quick introduction to yourself, your role, and how you got involved in Aqua?
Yeah, sure. I have started two businesses so far. One became by accident an investment bank, which I took public in Germany. So I was running a bank as the CEO for almost 15 years. And subsequently, I built a fintech, which I also took public in 2017, which is currently trading with a market cap of more than 100 million. I originally planned, after two IPOs and running two public listed companies, after I left the board of my last company, to retire. But then I bumped into our other co-founder, our CTO, Dave, who used to work at Barclays Investment Bank. And he was responsible for Barclays to design indices. You might are familiar with the regular ones, which is the DAX, the Dow Jones, the NASDAQ. He was working on complex indices for BlackRock, for Vanguard, for really large corporations, and created these indices with constituents from many different areas. And this index engine was then sold from Barclays to Bloomberg for $1 billion. Dave was the lead engineer. He got a nice handshake, and obviously that wasn't what he expected. So he left, and we got together with Dave and discussed, well, if you can build indices with hundreds of data points, why can't you build an index on, let's say, Ronaldo or Messi or Donald Trump or Kanye West? Because if you think of the economic value of a person, it basically consists out of four basic pillars. There's the traditional financial values. Let's take Ronaldo. You got the contract value, the sponsoring contracts. That's the first pillar. The second pillar is his performance on the pitch, on the soccer field, which is the matches he wins, the goals he scores, etc. And then there's the third pillar, which is the media sentiment, the general perception of the media, where we have to do some data mining in order to qualify that sentiment. And the fourth pillar, basically responsible for 50% of the value, approximately, in some industries, is the social media presence, and the followers, the likes, the tweets, the shares, the comments. Now, if you take all of those together, you kind of get a holistic representation of the value. So unlike within the crypto industry, the supply and demand on trading these indices is not the or the main determining factor. The supply demand here is basically something that fluctuates around the index, which is the pure fundamental value of the person. And I thought this idea is basically too good to pass on it, because for 20 years, we've been investing in exactly the same things. The only thing that was an innovation are the crypto markets, which obviously you guys took a very important, significant role in kind of making it more public. But other than the crypto instruments, there was no innovation. And my role at Aqua is basically looking after the corporate development, and also providing the opportunity for investors to have a liquidity event, because many companies stay private, you invest, you have a share, and what do you want? You want a liquidity event, you want an exit to a large corporate, or you want to make the company go public. And that's basically, alongside with the strategy of the corporate development, my core role within Aqua.
Okay, so you've done a couple of IPOs, and your goal is to start with the end in mind and actually turn this into an exitable opportunity if everything goes and you meet all your milestones. Thank you for that intro. And we've also got Marc here. Marc, do you want to give a quick intro to your role and how you got involved in Aqua?
Yeah, absolutely. So Marc Aspinall, I'm the Chief Operating Officer. So my background is I've been 20 years in the online trading space with global companies in very much global roles. So I was the Group Director of Partners Distribution and on the global executive team of CMC Markets, a $1.4 billion LSE listed entity. More recently, I was the Global Head of Sales of ADS Securities, which is a large fund-backed Middle Eastern brokerage. And I've also worked with Yasin on Naga, the IPO back in 2017. So as a team, we've worked together on projects before and known each other for many, many years. So my focus within this entity is bringing these index products, these fantastic index products that are very innovative. The first time that we have seen this level of data mining, data exploration on individual performance, and bringing it to the markets across initially financial services verticals, but other verticals that a big data project such as this can actually lend itself to. So as Yasin said, this is very exciting. And in the first financial services vertical that we're looking at the moment, it's the first real innovation that we have seen for 20 years that has either not been crypto or driven by regulation. because ultimately, particularly in the online trading space, it is actually regulation that is driving the changes that the clients experience. So a very exciting product, a very exciting time, and look, really excited to have an opportunity to speak to your investors and your community to explain more about what it is that we're doing and how we intend to make this into a successful global company.
Excellent. Okay, so you can see that the team is a big part of what we look for when we work with companies on Bank to the Future. Not only are we looking at the products, but we're looking for people that can actually execute this. And I hope that comes across, that this is a team that are perfectly positioned to tackle this market and have lots of experience in that. So now let's maybe shift over slightly. Also worth noting that part of our requirement at Bank to the Future is that when we put a deal on the platform, there's normally an anchor or lead investor. This one has been led by Elevate 3. For those of you that are not familiar with Elevate 3, I think one of the core things is that it's actually backed by Peter Thiel's Founders Fund. So, you know, that's a very reputable investor in Elevate 3. So that's one of the cornerstone requirements. And now it's about looking at what the company is up to. So why don't you talk about some of the things, why this opportunity hasn't been around prior to this and why now is the right time? So what we have seen, one big trend that we've seen in financial markets is a movement away from investing in individual companies to actually investing in indexes. And so, you know, I mean, I haven't looked at the stats for a long time, but my guess is that approximately 50% of all investments are done via the index mechanism right now. After all, why try and pick all these individual companies when you can do that via an index? So what is the importance of the index as a product in relation to how it relates to how we can now have this innovation in trading humans?
Sure, if I might answer on this. The thing is that the source of every economic success is always a human being. It comes down to an entrepreneur who kind of drives the whole thing. If you invest in Tesla, up to a large extent, you're buying into Elon Musk. And if you look at the markets or if you look at the participants, you might not necessarily have an opinion on basically Tesla's next quarter's results, but you will have an opinion on either an athlete like Ronaldo or Messi. You will have an opinion on your favorite celebrity or politician. And when it comes to investing, most people basically invest in something they don't usually understand. They basically follow a certain peer group. Here, there's something that is far more relatable. The whole investment industry is still quite niche, not for us who are here, but if you look at the average person, they would invest in a traditional index like a S&P or NASDAQ or Dow Jones index and participate on that. If you want to invest in a human being who is the core source of every success, and you really want to make it broader and appealing to people and make it relatable, the only way to do is to find everything that is available on that person and then create an index out of that in order to basically capture every source or component that contributes to the value. Now, you might say you create an index. How does that work? So again, like Marc said, there's regulations on indices. There's the so-called BMR regulations, called the benchmark regulations, where the European regulator basically requires the core minimum requirements that you have if you set up an index: the constituents, the weighting, the allocation, the consistency. And with everything that is regulated, these things have an audit. So let's take the Aqua indices, for instance. If we say that the value of Kylie Jenner basically is built upon a certain number of components or index points, let's say 500 index points from fundamentals to media to social media to etc., then that particular composition and the constituents are audited, in our case, by one of the big 4 companies, which gives the investor certainty that that index is consistent, that what he's investing in is a consistent representation, basically the only and the first holistic representation of people. If you look at the private equity industry or the investment industry in total, we have very objective decision-making processes. They're very, like, say, quant-driven. We look at data, right? But when it comes to the most important key decisions, the executives, their gut feel, their intuition, we have nothing to peer group, to benchmark these people. Now, if you look at Aqua, if we have a soccer match, we will be able to not only look at that particular short time window of his performance on the pitch, we look at the general economic value, we look at the social media value, and by putting that in relation to other players, because every index is a peer group and a benchmarking approach, we basically have a view over the landscape that allows you to see who is where and who is investable. And by having the audited and benchmark regulation compliant index, you for the first time have the ability to really invest in something that is relatable for everyone, has relevance for everyone, and basically everyone has an opinion. That might not be the right one, but there is one, which is something, if you look at market adoption, that is far broader than an S&P index or a cryptocurrency, which is still very complex, but you have a relationship to a certain individual. And that's what we're trying to make investable.
Okay, maybe one of you could help us dig deep into what actually make the price of, let's use an example. Okay, we're in the US election. If somebody wanted to invest today in Donald Trump, or maybe Joe Biden, I won't try and make this biased in the current environment. What would be behind that? What would your index be looking at?
Yeah, sure. So the data points are different from category to category. I just gave you the example of a soccer player where you have the fundamentals, the performance on the pitch, the media sentiment, and the social media. Obviously, you don't have the performance on the pitch with a politician. So data points in politics are completely different to the set of data points you might find on celebrities. To not make it too complex here, if you take, for instance, an actor, you obviously have the box office sales that factor in, you have the contracts that factor in, you also have the ratings, the Rotten Tomatoes to the IMDb's to the Metacritics. And so it's basically a blend, a portfolio of different indicators that have to be consistent within a certain category. And you also have to find a similar number on data points. You can't have like an 18-year-old aspiring actor being compared to George Clooney, because there will be much more data points in comparable categories with George Clooney than the 18-year-old actor. The same goes for politicians. So you will always have a peer group of similarish players or individuals that we can peer group, benchmark, create an index on. And the exact source of our data is always public. That's very important. So we're not inventing anything or interpreting our own opinion into these indices. What we do is we gather all the data that is available on the internet, we organize it, we normalize it, and we put it into a consistent framework, compliant with the European regulations. So what would take you normally hours and hours of internet research in order to come up just with a snapshot, we give you with a chart. So Google basically tells you who, what, where, when, and how, and we tell you how much. And we tell you how much at every single point of time in history. That gives you a chart on that individual that you want to trade or invest in. And that is very, very unique.
Excellent. Okay. So are you starting with a particular category as like your first area to kind of beta test this? I mean, what stage is the product at right now? Are you still at the research stage? Have you developed the product? Is it live? Where are you?
So we're actually already in the pre-onboarding with the first market players from the financial industry. And luckily, some of our cornerstone investors are also owners of financial brokerage and online trading firms. And I might pass over to Marc on the particular verticals and actually the need or the particular problem we're solving in the industry, or the problems we're solving, plural.
So where we are on the product is, this product has been at least the last 24 months in the development of this pricing and algorithm model. So we have, obviously, as we mentioned, over 500 plus data points across many different horizontals within the market. So we are at the stage of going into our beta testing with our live tradable instruments this month. And we are looking to go live at the end of January across 3 horizontals, which will be soccer, cricket, and esports. And these will be our first indices. We will have up to 2,000 indices, though at this stage we may publish slightly less than that. And we initially, the first model will be distribution amongst our broker partnerships, where we have already in discussions and formed relationships with a number of the leading online brokers who wish to take our products alongside their existing traditional trading products. Because as we mentioned before, I've been in the financial markets for 20 years, and I'll be honest with you, I've probably got more emotive views on how Paul Pogba will feature and perform in the next 12 months than I do Vodafone or Tesla, because it's more natural, it's more interesting to me, it's something that I understand. So we will, over the course of Q1, Q2, look at developing our broker relationships and broker networks by distributing our products down established, already functioning distribution networks, and therefore educating clients who are already familiar with the online trading space and the trading with CFDs, but with our own human performance CFDs as well.
Okay, so this is an important distinction. What is Aqua actually going to be doing? Are they creating the index? Is it creating the trading platform? Is it the product? Is it the Oracle, the data feed? What exactly will Aqua in this bot, and help people understand how these different pieces fit together as well?
Absolutely. So Aqua Digital Rising is a big data factory that creates indices on people. Now, these indices can have a number of distribution and a number of uses. So if the Aqua Digital Rising sits on top, we have basically across 4 verticals. And the first vertical that we are implementing these indices to is in financial services, where we will take this real-time indice pricing, and we will apply a CFD wrapper around it, effectively taking this numerical value on a person and making it tradable within the CFD marketplace. And then we will take that CFD wrapper and we will distribute it amongst existing brokers within this space to distribute to their clients. So that is the vertical 1 that we are launching in January of 2021. Then across these verticals, and this is something obviously we can discuss over the course of this, we can also look at the gaming market, because there's a huge interest for real live games on individuals and people, this whole element of fantasy. There's obviously the information and data that we collect is significant, sophisticated as well, in terms of other routes across the gaming/gambling market. And then there is actually the big data itself. And this data has multiple purposes across both financial data, across media, across sports. And we're even looking at, in terms of the human resources and the recruitment and individual element of this data as well. So Aqua Digital Rising that sits on top of this, as I said, is the data factory. And what we have is multiple distribution models that can then sit beneath that factory and employ and monetize the data that we produce.
It's basically a bit like Palantir for everyone with a positive purpose. If you look at it from a practical implementation to make it more concrete, if you trade with your online broker and you currently see DAX, Dow Jones, NASDAQ, you will see Ronaldo, Messi, Kanye West, and Donald Trump at some point. So the integration is seamless. And also to understand a bit more, why is the trading industry desperate for that? Because they're suffering 3 major problems. It's the same actually in the crypto space. Very low margins, spreads tightening. We are helping out with that because we have indices that are new where you have generally higher margins. The second part is that they all lack USPs and innovation. Every trading platform in the financial markets, also in the crypto markets, basically offers the same, maybe a different user experience. We're offering a real new underlying that's fully relatable. And the third thing is that for these industries, we're broadening the reach. Just like Marc said, you will have an opinion on Pogba, but you might not have it on a certain stock. So it's broadening the audience, which is a huge difference. And it's a seamless integration in the existing user experience. Alongside with your traditional assets, you are seeing the new assets and they're accessible, tradable, just like a share. But
so making sure I've got this right. So Aqua is the data pool, Will Aqua actually be creating the CFD derivative product, or will it be working with a partner that can use the data to create the CFD? And will it then need partnerships with lots of different brokers that they can then add it to the suite of products that they offer to their customers, or will you be going direct to market?
No, we're definitely going B2B2C. So the brokers create the wrapper, the brokers are the financial institution. And that's very important when it comes to user adoption in fintech. The biggest hurdle is trust, reliability, regulation. These brokers are reputable on their own. So the clients already have their deposits and funds there. So the brokers will just take the index data, but share the revenues on the trading with us. So our monetization model is basically a share of the revenues that the brokers generate from creating CFDs on our indices, but we are staying in the background. We are not a B2C company. And the good thing is in that respect is that, as I said, the customers already have accounts, deposits there. They're actually looking for new instruments. Marc always says, we're actually filling a gap in terms of innovation of alternative assets. People are looking for these assets. They already have their funds there. They trust their broker. And then they get the indices, which are basically BMR compliant and audited by one of the big four, which is, if you have a new underlying, at least the wrapper should be traditional and known in order to allow quick and fast traction and adoption. That's the strategy here.
Excellent. Okay, that makes a lot more sense. So we've got this data that is then used for regulated brokers to create these derivative products, and all of the consumers and investors and traders already have those relationships with those brokers. Two things that come from that. Just making sure that our viewers and investors have, as I said, in Europe and UK, they might be more familiar, but could you help us understand a bit of the construct of the CFD product for those that are not familiar?
Yeah, shall I? So a CFD, as Andreas mentioned at the top of the program, is a contract for difference. Now, a contract for difference in Europe is a regulated instrument under ESMA, whereby a client gains access to the movement of an underlying instrument. So, for example, Vodafone share would have a Vodafone CFD. The FTSE is a CFD because it is an index based on a number of underlying shares beneath. So what happens is that an individual effectively puts an amount of money, which then through leverage gives the client a larger exposure on that instrument that is cash settled. So the client never owns the underlying Vodafone share in this example, but they have access to the profit and loss that is generated from the movement. So we are doing exactly the same with Paul Pogba. Paul Pogba, you will never own a share of Paul Pogba, but what you will do is you'll own the right to the profit and loss that is generated from the movement of the Paul Pogba CFD. And this movement is driven, as Yasin has said, across the four segments of his performance, his media, his social media, and the technical data that sits behind there. And those dates, that data sets are being constantly questioned, queried, analyzed, weighted in real time. So this is moving not only during match day when he's on the pitch for 90 minutes or 32 minutes or however much football he's getting at the moment, but also during the week when he is tweeting, when he is retweeting, liking, sentiments, etc., when he features in the news. Someone like Cristiano Ronaldo is huge earning through his football contracts, but he earns more through social media. And that is because we are seeing stars now, the traditional stars across Hollywood, Bollywood, sports, etc., so much of who they are and how they are generated and how they are perceived is actually done so through social media. And that is something that we are looking to numerically analyze and apply a value to.
And Simon, very important to mention, you can go long and you can go short. What does that mean? It means that the client can choose or can have his idea of the future direction of that index. If he thinks Raheem Sterling is on the top of his career, it can only go down. He can go short. He can sell it and take profit from the fall of that index. And if he thinks, no, he's not even half of the way that he can go long, and he participates from the raise of the index. And the last one, even if we are global and our approach is very global and our approach is big data, we are some kind of local. Why? We are from the very beginning represented in China and Hong Kong. We are represented in India. We have a special view on the sports that people in India like or prefer. We are strong in Middle East, North Africa, and Europe, of course. And we have gentlemen taking care of our South American business. So from the question, where is Aqua going? We are from the very start a company with a global approach and a global representation. Our business is global. So Marc is speaking to brokers all over the world.
Yeah, excellent. I can see the celebrities and the players getting concerned already that they've not only got to deal with their careers going down, but now they've got to deal with the short sellers of their products. But that's the market. That's where we're all driven to. So it's going to be fascinating. What about? I think another important topic is one of the challenges we've always had in the Bitcoin community is just the simple question of what is the price of Bitcoin and the integrity of the data, given that there's many unregulated exchanges all around the world that are engaged in crazy practices like wash trading, manipulation of prices, and all sorts of stuff. So what kind of regulations are you going to be subjected to, and how do you deal with some of these challenges around the manipulation of data that these financial products are going to be built upon and ultimately cost people money if this goes wrong?
Sure. If you look at the Aqua rollout of the product, there's two layers, as we said. There's the big data company and there's the regulated broker. So you have two layers. The first layer that you have is the broker that you deposit your funds with, and the broker acts as your counterparty, as your market maker. He basically has to adhere to his local regulations. He's implementing our products, and he will act and needs to act according to exactly the same regulations in terms of best execution, transparency, market manipulation, as he has with his other traditional financial instruments, because the CFD is a so-called financial instrument specified as an information derivative. So exactly the same regulation applies to a CFD on an Aqua index on Lionel Messi as it does on a Vodafone share or an S&P index. So the certainty and the level of regulation is way higher than the crypto space because we are categorized as a financial instrument. And by definition, all the transactions in terms of execution, pre and post-trade transparency, best execution, etc., insider trading, front running, that is all regulated. So contrary to the crypto world, that is exactly the same as you would have it with Charles Schwab, E-Trade, IG Markets, or whoever we want to name in the traditional established financial player space. Now, in terms of the stability of the index components, we already touched on that. Our indices are built compliant with the European benchmark regulations. That means all the components have to be consistent and they're audited. So if we, let's say, wanted to overweight social media on Ronaldo mid-year, because we think it suits our purposes, whatever that might be, because we don't have positions. But if we just didn't want to be consistent, we wouldn't get it audited. So there's that audit, the regulation, the benchmark index layer, but there's also the regulation basically that is with the brokers and the people that the clients actually trade with. And then there's a third layer of, I call it regulation or stability by construction, which is the fact that we have fundamentals. If you wanted to short Raheem Sterling, like Andreas said, because you think I just want to push him down, and if he scores 10 goals, what will happen is that the index, which is the fundamental data, will never divide too far from what certain players can do. Think about somebody trying to short sell a stock that is constantly making profit. That doesn't work. So if Raheem Sterling constantly scores goals and wins in popularity, and if you keep shorting him, you can drive a certain volume into that direction, but you never be able to manipulate that particular instrument.
You can send your critics broke, basically.
Yes, exactly. And that happens with a lot of short sellers. So we're trying to do that. And there's a fourth layer. If you have, let's say, one broker who wants to quote too far or skew his spread, to be more specific, right? Or try to impose a certain direction. As we are delivering our data to multiple brokers, and there's always the index, the fundamental, you can do, just like on the crypto instruments, intermarket arbitrage. If sterling is undervalued at a certain marketplace due to short sellers, you can obviously buy him there and sell him at the overvalued place. So we assume down the road that the marketplace with many brokers that are connected will basically be pretty much a close oscillation around that index price, which is the fair representation of the value.
Excellent. Okay, so just help us understand a bit about the organizational structure. So you said, is there two different entities? One is a regulated broker, the other is an index provider that has to adhere to European regulations. Are the investors, would they be investing into a parent company? Could you just help us a bit about the structure?
Yeah, so the structure is very simple. Aqua, as the data provider itself, simply has to adhere only to the benchmark regulations when constructing the indices and has to audit them. The broker is independent. They're not parts of us. They're established market players. Investors would invest into Aqua Digital Rising as a pure big data analytics company. And that comes with another beautiful thing. Let's say we would go B2C and have our own broker and be a brokerage company. What happens is you get valued maybe 10 times your profits. If you're big data analytics and you look at the exchanges, just look at the NASDAQ and look at the multiples, you get 20 to 30 times your revenue, your turnover, which makes a huge difference because the big data space, by definition, has a much higher valuation. Investors invest in equity of the big data core mothership that then distributes to all the others, and they benefit as an equity holder from the high valuation multiples you get when you go public or in a trade sale, which is 20 to 30 times average earnings, not earnings, turnover revenue. So let's say at a turnover, regardless of the profitability of 20 million, the valuation of a big data analytics company is usually between around 400 million. So it's in that sense, the space where you get the highest valuations in the entire segment, rather than being a fintech firm or a financial service provider. You benefit from high valuations, and you also have a direct, simple equity co-ownership. You get shares of Aqua.
Okay, and jurisdiction, which jurisdiction did you choose for the company?
We are London-based, and
England, Wales.
Based in the UK, in London, and EIS eligible. That means that UK investors get the benefits of the enterprise investment scheme, which comes with a tax benefit for every investor that comes from the UK or invests via a UK entity.
Okay, so that's most of my questions. Famida, have we got any questions from the community, the investors?
Oh, I was on mute. Hello. Yes, we do have some questions. Okay, so some of them might be these questions you guys might have already covered it in your very detailed conversation there with Simon, but I'll just ask, and then maybe you could just give a brief answer if that's okay. So Liam Nadine has asked, is the primary market for the instruments the regulated financial industry, brokers, fund managers, etc.? If so, does the team believe that the industry will be interested in this type of asset, or will it be perceived as a bit novel, i.e., is the market too conservative for this type of investment?
No, I don't think the market is too conservative. I think what Marc said and Yasin pointed out earlier, the brokers are looking for innovation, and they have to attract new audiences. And the new audience, the younger people that are more interested in social media, more interested in sport, they could never monetize that. They could never cash out on their knowledge. They get another option. So we are not kind of throw something out from the trading table of a broker, we add another position. We add the indices, but we are not fighting the DAX. We are not fighting the existing financial products.
Just for the demand, an interesting example for fantasy sports is the company DraftKings, which was founded 6.5 years ago in the US, which does fantasy sports, which is currently valued at 18 billion. That shows the strong demand. I mean, the company that Andreas was CEO for the German-speaking territories, IG Markets, is a £4 billion market cap firm. They took 30 years to build that. DraftKings took 6 years to go to 18 billion. So that shows you basically the dynamics, and that's what the financial industry also is looking towards when trying to grow into, like Andreas says, new audiences. They have a need.
Yeah, and I guess I would imagine if this gets traction, that the celebrity market is something that people would be, a lot of these brokers, they were really retail driven. These are retail driven instruments in many of them. And really just understanding the value of a footballer or a celebrity, I think it's a good match, if anything else. I think this is something readily understood, and I can see the brokers would look for a product like this because it's so much easier to be understood once understood, but obviously new.
Quite simply, that will be our initial launch vertical. If you look at the Premiership football, all 20 Premiership football clubs are either sponsored on the shirt or have a primary brokerage partner. So the brokerage world understands the value of sports and the community that looks at sports, also the crossover with investments. And as Yasin said earlier, we are not creating a market, we're simply filling a huge vacuum that exists. And therefore the traction that we have developed early, do we feel it's novel or fancy? Absolutely not. This is genuine. And we have a huge number of brokers that are physically approaching us saying, we want to take your liquidity because this market is desperate for innovation.
Especially the older generation considers sport as something for the weekend as opposed to work. But I think the younger generation sees the enormous market of entertainment. Sports is an entertainment market, a huge entertainment market with massive revenues, massive profits. And what we do is we're offering our products within this huge industry of entertainment. And this is something that fuels other industries like fashion. I learned, I'm not aware, I'm not such a fashion victim, but I learned that Nike, for instance, Adidas is having a substantial share of the revenues from fashion, which again is promoted by sports people. So I think it is something very conservative to look at it as a big industry, and we're filling that vacuum with products.
Nice, thank you for that. Another question from the same person, Liam. Is the pricing of each asset determined by the market, supply, demand, or by your formula?
No, it's definitely the fundamental data, the formula. The supply demand might have an effect on the spread with the broker, the bid-offer spread, but there is clear fundamental data. Going to Trump and Biden, we would not just take the polls, we would take the social media, the tweets, the comments, the decision processes, the supporters they have in parliament, etc. So there is a lot more fundamental data than the polls. Think of real-time polls on everyone, on everything, that factor in almost everything of significance that you can get. And that leads to another thing. If the fundamentals stop existing, let's say a soccer player stops his career, we obviously have to discontinue the index because there are no more fundamentals, because then that instrument would be left to supply demand, which would lead to a pure kind of orientationless floating of the asset, which is then driven by supply demand, which we don't want. We need the data to be there consistent, and as long as it's there, the index is priced. After that, it gets settled in cash, and the investor gets the cash payout at the point the person announces the stop of his career.
Yeah, you mentioned things like the footballers making more out of sponsored tweets and stuff like that. What is that data even available? Is it not just completely private data? Or?
It is derivatives. It is usually not the core simple data. To give you a very simple example, if you score entrepreneurs and you try to get their popularity by the media sentiment, the media mentions, you would have gotten Jeffrey Epstein leading the charts in that particular pillar last year. So you need to harness the data, and you need to basically create from the follower base a potential economic value attribution, which is obviously different for every data source. So we work with the data, we normalize it, we draw conclusions from the data, or have a usually derivative composite from the data, which then feeds the index. You obviously don't have exactly the number that somebody makes from his YouTube videos, but somebody who has 2 million followers, you have a pretty good idea what the value that is, also with regards to the relativeness of somebody who has 40 million. And that allows you a peer grouping, a benchmarking, and the data is used in an intelligent way, worked on intelligent way, normalized, because somebody who doesn't have a YouTube presence, but just Twitter, has to be set in relation, right? Because there is some kind of a present. And that's what I meant initially when I said we harness the data, we normalize it, and try to make it comparable and representative.
And is the data that goes behind these numbers, is that all transparent, or is there a trust element to it?
So we basically have to, in the audit, disclose obviously everything to the auditor, and the everything. However, as some of the data sources that we use are a derivative, you will not necessarily know exactly the formula that we use in order to attribute that into the index, if that makes sense.
Sure, yeah.
Okay, so you actually mentioned something about, you know, if the sports person's career ends and then the person cashes out, right? Yeah. So there was an interesting question in the chat, but I'm not going to ask it how they asked it. Is there, how would you know if that data is corrupt? Like, how would you know that that person has officially ended? How do you know that that person didn't corrupt?
So the whole fake news element to it.
Mm.
So first of all, the weighting of a single tweet, it has not the weighting of the value of the transfer value from a soccer player. There's obviously cornerstone events which determine kind of a core value. We have certain filters for data spikes. It's just like the same in the financial markets. You have bad tick filters, and they undergo a certain process, but you need a certain consensus in data in terms of the official source, and we can only rely on the same methodologies that the general media has, and that is available in terms of consensus, reliability, ranking, and scoring of the sources. Obviously, with the whole index composition comes a scoring of the data sources and also consistency that has to be met in order for a data point to make it into the index. That doesn't fully prevent that. If you have 70 million fake Twitter accounts, somebody wins the elections. That happens, yes. Even who knows if that was driven by Twitter without being biased here. But that is obviously a risk. If these wrong data sources become overwhelmingly large, then no system in the world can prevent that. But we're trying our best to have a certain level of consistency, cross-checking, and scoring of the sources and the reliability of the source.
Right. If I just may now, because that was a question that was actually from one of your members on our Q&A board. These freak events, which have been blighted sports betting, to be honest with you, are more prevalent in a binary event, where a single event is bettable and then settled, basically. Because we're constantly taking evaluations, a single event is less likely to impact an index than it is a binary bet. So therefore, why this may happen, in order to, for example, you know, it's been rumored in cricket, etc., the impact of us on our product is a lot less. And if this is a continuous event that this individual is willing to throw their career over months and years, then yeah, absolutely. That ultimately we would track their downfall, because there'd be very little for them to come back to, basically.
So what's the difference between a career ending and a person dying?
Career, as long as as Yasin said, providing there are data points and someone is active within a event or a sport, then we are able to continue to price them. Should someone die, then the data and their performance, that ends. So effectively, we would cash settle them against what their last active point was, as it were. Just as, for example, a oil future expires, a quarterly oil future expires, it gets cash settled basically against that last price at the settlement price. And that's exactly what we would do for someone ending their, who's retiring or ending their career, for example.
Okay, cool.
So essentially, you are performing the role of the oracle here. And I can imagine from this as well, once you've got your initial brokerage CFD products, I can imagine the blockchain community wanting to use that data to start to put together their version of the products, maybe decentralized financial products and all sorts of stuff. I can imagine once this data exists and the integrity of it has been proved, this could spur a mountain of innovation and different products that can come from it.
Absolutely. And if you look at the background, again, what I said earlier of our partner, founding partner, Dave Dutter, who's our CTO, we are aiming to become kind of the Bloomberg for alternative assets, and therefore obviously aiming to distribute the prices to as many verticals as possible. Just the pure data on traditional complex indices as an engine has been sold for $1 billion, as I mentioned, to Bloomberg from Barclays. So we see actually the data play down the road as the much larger upside than the monetization initially with the financial brokers. That gives us quick traction and quick monetization for the first 2-3 years, but the larger play is definitely exactly what you said. Once it's purely established, there will be interest from various industries and especially, of course, also the blockchain industry.
Yeah. For me, do you got more questions?
Yes, I do. So a question from Steen Jensen. But normally when you buy CFD on, for example, gold, there is an underlying asset and a tradable value, but you cannot trade Ronaldo. Please, can you explain where the underlying value is?
The value is created from our indices. So as Yasin said, we create indices using the different price points, the 500 plus price points. We then create that value, and through auditing and through the benchmark regulations, that methodology is checked and confirmed, as it were, and also displayed as part of the BMR process. We will have to display and make public a huge portion of that methodology, which of course we will seek to protect. So while there is not a physical underlying such as gold, there is an underlying methodology, and there is consistency in the methodology to create that price.
And there is a value. And if you think about it, if Ronaldo, if his transfer value, let's say is 50 million, then you know at that point, a certain soccer club considered Ronaldo worth 50 million, correct? You have his next transfer maybe in 3 years. So you got 2 main data points, which might vary, but in between a lot happens that leads to the data points. So obviously the strongest factor of the value of Ronaldo, the underlying value, is the transfer value. And nobody argues with that because a certain soccer club pays that price in cash at some point. So what we do, let's say Ronaldo is worth 50 million and this index is at 100. If the next transfer value in 3 years, if we would have a pricing every 3 years, would be 100 million, then the index price would be 200. You buy at 100, you sell at 200. But in between, there's a lot that happens that leads to the increase from 50 million transfer value to 100 million transfer value. And that process and that route that leads from 50 to 100 million is actually what we are making transparent and liquid and investable. And that's what the fundamentals represent. And so there is that fundamental value of Ronaldo, just like a person pays 1,500 per ounce of gold, a certain club paid 50 million for Ronaldo.
All right. The next question I have from Kermagod, UK. Will the shares owned after this raise on BF be the same as the shares owned when a float happens?
I'll answer that one. So the way that we do this at Bank to the Future is we set up an SPV, and an SPV is simply a special company that serves no other purpose but holding the shares that would be raised. So you're investing into a special company that we set up, and we would then, underneath that, we would make an investment into Aqua's company, and for every share in the SPV, it would be backed by 1 share in Aqua. If the company exited in the future, so we've had several companies that have been through that process, if it was a private acquisition, then simply we would go through the corporate process of whatever's involved in that acquisition. So Aqua would deal with our SPV. We would then go through the corporate action process. And when you invest through Bank to the Future, you as an investor will get all of the distributions. So if the company was sold, we would receive the money as the registered shareholder, and then we would distribute it to you on your Bank to the Future platform, minus a 5% fee, which is our fee that we charge to investors in that. If the company actually was to go public, then there would be a process of swapping out those shares that you hold in the SPV for the shares that were eventually going to go public. All of this is covered in your investment agreement, and so you can go through that in detail if you actually make an investment through the platform, and download all the agreements and how the Bank to the Future process works. This is what makes it possible, because if private companies had to take on lots and lots of shareholders for smaller amounts, and it becomes infeasible, it becomes very hard to take corporate actions, and it can actually harm the process towards trying to become a public company or trying to get acquired. So we set up this structure in the middle so that it's possible for investors that want to diversify across a wide variety of private equity deals. They can do that with smaller amounts through this structure.
So just going off from that, Simon, I don't know if you have already covered this, sorry, but what is the return on investment? So, I mean, will there be any dividends in the future?
I'll let the guys answer that, but in general, just in private equity deals, most people, a professional venture capitalist investor doesn't tend to invest in private equity to earn dividends. If they're looking for income, then there's much better products than private equity to invest into, and much safer products as well. The whole point of investing in an early stage company is actually to invest in at a very low valuation. And if the company succeeds, then you get many multiples times the value that you originally invested into. And most private equity professional investors, they wouldn't really want the company taking some of their money and paying it out to shareholders, because they'd much rather them reinvest it into growth, because the game of private equity is actually trying to get a significantly higher share price and a liquidity event such as an acquisition or an IPO. But whether, we have had some companies on our platform that turned out to be ginormous cash cows, like a Bitfinex, and they took a lot of their profits, their retained profits, and rather than investing in growth, they did pay dividends. But I'm reluctant to say that example, because that's not really why people invest in these asset classes. But I don't know if the Aqua team had a special case of what that's different to a normal private equity company.
It's exactly the growth path that we're trying to go. We believe, especially since we get the highest multiples on our valuation in the segment that we are, this is the most efficient route in order to return a multiple. The last 2 companies I did IPO, I did exactly the same with, and returned factor 20 for all early stage investors. And that's basically the objective here.
All right, we have hit 1 hour on the dot, but I do have one question that I actually would love to hear an answer for. Is that okay?
Of course.
Yeah, cool. So somebody has actually asked, Liam has actually asked, might there be any copyright issue over the use of someone's name or a brand?
Yeah, so we actually have, as one of our core members of the team, we have an IP lawyer, because it's obviously something that we're acutely aware of. So if you look at the name and you look at image, let's break the two, name and image, and let's take a footballer. So names that we use will be for reference purpose only, for referencing the index. We will not be looking to use names to market or promote our business, but purely to reference an index. And that is available data, and that is not subject to copyright laws. Now, if someone is trademarked, of which the brand David Beckham is, then obviously we would not be able to use that name, but those individuals are very, very few and far between. Regarding images, there's two levels of images. We would buy for purposes of displaying on our platform, on the platforms. We actually buy effectively images from data companies for the purpose of reference data, and that is just a facial image. And we buy that image licensed for that particular purpose. So we are only dealing with licensed images. Should we choose to use images for promotional purposes, then once again, we would have to purchase that image for that particular promotional purpose. And obviously there is a premium around that. So all images we use will be licensed for the purposes that they are required to be used for.
All right, that's
excellent question.
God, Simon, there's one more question. Can I just ask you this one?
Okay, go for it. Yeah.
All right. So, so Steen Jensen has asked about the 10% discount that has been offered to only BF investors. So, why is that?
Well, I'll answer that because our pitch management team hardballed the team to try and get a better deal for Bank to the Future investors, and the Aqua team complied.
And that's it. Okay, cool. I think that's a wrap, Simon.
Okay, all right. Well, just closing out, maybe there's some closing comments that you'd like to give on the the future of Aqua, where you see this going. You've all covered it, but maybe you want to give some closing remarks each in your own words.
Sure, Mark, do you want to go ahead?
Look, this is a hugely exciting opportunity. None of us are here to create an entity that was worth $50 million. We are stood at the precipice of a very exciting opportunity where we have the ability to take a 20 time, much higher multiple, and not only deliver to our investors, but the business as a whole. We genuinely think we're stood at a game-changing event. Just discussing now amongst the four of us, Simon, you raised, well, and I saw you smile and you said, well, actually the opportunities for this data is far more than financial services. We know that. We know that that is just the step one of a multi-stepped approach. And we have worked hard to have a team and build a team around us to be able to deliver that. And we are all very focused 24/7 to actually do something a bit special in this industry and the wider big data industry. So yes, look, if anyone's interested in investing, absolutely, it's an exciting opportunity. And yeah, we're very excited to start this journey and pilot the ship.
Okay, I just want to thank you all for taking the time out of it. We wish you all the best in your business, and I hope this helped investors actually get a greater understanding of at least what the goals of the team are and the aspirations of the company. So thank you all very much, and we look forward to seeing where this goes.
Thank you very much.
Thanks very much.